And good afternoon, everyone. Welcome to the High Valuation Code, another evening looking into what's going on in the market and how it's related to you. So this is not a normal business series, as you may imagine, as you've been following us for the past weeks, because we are entering a period in which millions of businesses will gradually become economically invisible. And you say, oh, so such a drama. No, but listen to us, because actually this is very critical now. Not because they are bad businesses, don't get me wrong, not because they stop working hard, uh, but because the rules of valuation have changed faster than most founders realize. So for the last 50 years, business competed through distribution, scale, labor, physical assets, and financial reporting. But now with AI changed the architecture of competition itself. So in this AI economy, as Matteo already coined the term, speed compounds, knowledge scales instantly, pricing pressures accelerate, and average businesses disappear into algorithm noise, which is not what we've been used to. So the dangerous part is this. Most companies will not notice a collapse immediately, right? Because as any changes, you don't notice the pain until it's too late sometimes. So revenue may still exist, profit may still exist, customers may still exist, that's right. But economically, strategically, and from the investor perspective, they become invisible. These companies are actually still thinking in the old way, as we said, but this change is happening. So, and I think that you, Matteo, have spent decades, actually, effectively, you spend decades inside startups, scale-ups, crisis exits, and reconstructing companies. And obviously, you wrote a book, which is Fail, Pivot, and Scale. And I think highly relevant, just from the beginning of the book, you see in chapter one, the chapters that say the capital shift, that no one prepared you for. This is chapter one on page 18 is already shows why businesses can look healthy on paper, yet still be exposed through capital pressures, founder dependencies, weak governance, and poor transferability, right? So as we now enter in the most dangerous periods in modern business stories, Matteo, welcome. What is your take on this situation that we're living today?
Thank you, Francisco. Thank you for having me again today. Well, as I mentioned a few times over the last few weeks, uh, the book came at a very, very specific time in our history. Effectively, there are three
Right,
big shifts that are happening right now. I generally really think that most businesses are underestimating what's happening. There are three
right,
big catalysts. One is we live in intangible economies more and more and more. Today data, algorithm, brands, they are worth a lot more money than buildings, machinery.
right,
92% of the valuation of the S&P 500 is made on intangible.
right,
So this is unstoppable. The other thing is AI is rewriting the valuation of businesses. Today, if you want to be investor ready, it goes without saying you're gonna have to be AI ready. The third big thing is that we got a big wave of private capital markets coming to us. An
right,
extra $10 trillion, unprecedented growth in private capital markets. They are looking for businesses to invest, and guess what? This is where we got the big gap because
right,
AI is not just simply another software cycle. AI is changing what market really reward. Historically, businesses survive because they had relationship, their distribution, their geography,
yeah,
their industry protection or information asymmetry. But AI is destroying asymmetry. It's destroying that
right,
information, and people say, "Well, that's what I is going to protect me." Knowledge is become abundant, and execution is now automated. So content becomes infinite and average positioning becomes really fatal. So the question is no longer, are you profitable? The
Right.
real question becomes, why should the market notice you at all? Because
Right.
that's the new question, really. So that's the crisis. Most businesses are visible operationally say, but strategically they're really, really invisible. And when you're invisible, you're destroying your valuation. So you're destroying your bankability, your ability to attract investor, and ultimately your ability to compete with other businesses, the ability eventually to have customer as well.
Right. And I think that's very, very interesting because that distinction, I think it matters because boards or executive teams or leaders, founders and teams still manage businesses using pretty much the industrial era logic, right? So they monitor sales, costs, profits, headcount, cash balances. But with AI economies now, they reward um, something very different, which is visibility. How do you differentiate transferability, defensibility, systematization, institutional confidence, and and if those things are absent, business become replaceable extremely quickly, right? Because actually you have a model that should be easily replaced. So in practical terms, so to all these abstracts, that actually we now have a distinction. In practical terms, so if we have two businesses, both generating 5 million revenue, for example, both generating 1 million EBITDA, on paper, we may say that look identical. Why then one become highly valuable while the other slowly disappears in these scenarios?
Okay, so you mentioned about two businesses. They both
Right.
generate £5 million revenue,
Yeah.
and they both generate £1 million EBITDA. Well, we're using the
Yeah.
pound as a currency because,
Yeah. This is
um,
international, so yeah,
yeah,
it could be any currency. Yeah.
we're in the UK, that's fine.
Yeah.
Now, you're asking me why does one become more valuable than the other one? The other disappeared, even if they
Right.
got the same financial statement.
Yeah.
And I will stress on this, they got the same financial statement, but one is valuable, the other one is disappear. Okay. Now this is where it's a big shift. We as you said before, Francisco, rightly, we're going from an industrial era logic to the new era logic.
Yeah.
Um, and in this new era, and this is really for you finance professional that you're listening today, and founder, of course, but especially finance professional, this is really a big threat because financial statements, they no longer explain strategic survival. Okay.
Right.
Financial statements don't tell you anything at all about the quality of your revenue. They don't really establish a balance sheet, for example. You will not find what really drives revenue. And many people, they are still stuck at what I call static intellectual property,
Right.
when they should be starting thinking about dynamic intellectual property, which
Mm.
is intellectual property that develops every day. Now, one
Right.
business may use AI tactically, and the other may use AI structurally. And that changes absolutely everything, even if you got the same revenue, the same EBITDA.
Right.
The invisible business usually looks a bit like this. Um, Typically, it's founder centric. Okay,
Right.
so nothing happens unless the founder is there or the founder determines what to do. The system are not proprietary, so they are borrowed from another owner, technology owner.
Right. Right.
There's no monetizable intellectual property and no repeatable process as well.
Mm.
No institutional leadership, so we haven't got governance really,
Right.
and no strategic data ownership. So that
Right.
means no pricing power, no investor narrative, uh, and not really scalable architecture. It
Right.
survives really through effort. But the visible business looks very, very different.
Mm.
I'll give you some clues.
Yeah.
A visible business will capture knowledge. It will turn know-how into system. Okay, so it really interrogates itself. What do I own? What do
Right.
I transform into business that I own?
Right.
And what happens with that is it builds defensibility. So now you're much stronger in the market compared to your customer. I was talking about dynamic intellectual property, not static intellectual property.
Yeah.
It will use artificial intelligence to compound capability.
Right.
So it will build on it, you know. It will understand that the dynamic part of this is important. Um, it will create predictable outcomes, and as a result of that, it will build revenues that will work without any founder exhaustion. In actual
Right.
fact, the
Right.
founder, this is succession planning, so there are absolutely that there is a transferability of value that
Yeah.
which is what matters. So just to summarize, yeah,
Yeah.
the first business sells labor. The second business sells architecture, and architecture always wins in AI-driven economies, and
Right.
there's no going back. You know, that's what is really going to happen.
Yeah, I really like. Actually, can I highlight two things actually that are very, very interesting. One is the difference between the use of AI. That one is used as a you mentioned structure, and the other one is systemic or tactical or structure. How you use AI, and the second thing that you mentioned actually, I really like to highlight is how the businesses are using selling labor, which is something that actually can be easily replaced, or with an AI structured outcomes or structure or designed, where this is where the business can be transferred, repeated again, etc., etc. So I think that these two things are very, very valuable to understand how it plays today in current environments. And that brings me to think about where risks become critical in this situation, right? Because most businesses are exposed without realizing it. So the founder might think, oh, we are growing, but structurally, the customer concentration increases, dependencies increases, operational fragility increases, and cash flow volatility also increases. So growth without the architecture magnifies weaknesses, really, right? So, but AI accelerate that exposure. So back to the structure, the how you use the things and design, etc., etc. And if you allow me, Matteo, I would like to pause here to share the trial of the book, because actually all these things are explained here just from chapter one. Actually, we mentioned already from chapter one, we have already the layout of the book. So the capital shift no one prepare you for, right? Because actually these kind of things are so new that actually is was one of my friends said is a leadership fog. So you don't know what is going on in front of you, but here you have a manual, an operating system to go work through this fog and come and thrive in this situation. So can we go to the trial material? You think we can do it now?
Yeah, absolutely. As you were saying before, these things are so new. Even though the high valuation triangle was created in 2017, 9
Right.
years ago for the University of Plymouth, but those shifts that are happening today, they make this absolutely inevitable as an approach.
Yeah.
And as you said quite a few times, the book has 26 self-assessment at the end of
Yeah.
each chapter. So it will be your companion. It will be your workbook. Let's call it like that.
Yes.
So I really welcome your invitation to show these 90 seconds that presents felt people scale. Thank you very much for doing that.
Okay. Oh, you're very welcome. Thank you. Let's go and watch it.
Yeah.
All right, excellent. Very good trial. So that explains what the book, how it works and how you can take advantage of it. It's available in Amazon. You can buy it there. Matteo, going back to topic, you often speak about the great commoditization event. So could you explain what you mean by that?
Yeah, thank you for this. Yeah, in fact, this is something that it's tough to explain, but it's exactly what's happening right now.
Right.
AI is compressing the competitive advantage, okay?
Right.
So if you had an advantage now, it just, it gets diminished unless you really do something about it. Yeah.
Yeah.
Why am I saying that? Because what used to take years to build can now be replicated in weeks.
Right.
I'll give you a few examples.
Yeah.
When I talk about marketing, it takes really not as much as it used to. Content, research, software, design, customer support, analysis, and operation. Average execution is becoming really free, that which never used to be like that before. So what that means is that businesses now they need something much deeper, which is why I developed the high valuation triangle. And the
Right.
acceleration now is so much more needed than it was 9 years ago in 2017 when the system was introduced.
Right.
Because businesses now need IP monetization. I mean, they needed IP monetization before, but now it's becoming really inevitable, like something that you have to really establish because you need to
Yeah.
establish what you own. Succession architecture and global relevance. Now, without those three elements, what happens is that AI turns businesses into commodities. And commodities, usually they compete on price, not on
Right.
value. Okay.
Yeah.
So when you compete on price, you're going to lose your customer on price. When you
Yeah.
compete on value, the customer will retain you on value. This is really fundamental. It's been fundamental when in 2017, I first introduced the intellectual property monetization, but today it becomes even more fundamental. Now, what happens when people compete on price, commodities compete on price? That destroys margin.
Right.
It destroys confidence, destroys valuation, which means, not only you lose pricing power with customer, but you also lose power with investor. You're no longer
Right.
investable, or you get a much lower valuation.
Right. Right.
The problem is that most founders, they don't really think like that. They still think operationally.
Right.
But valuation, which again is not just what you want to do when you exit, is also about your market position, your pricing power.
Right.
It's really psychological. Investors and banks, they will ask, can this scale without chaos? Can this survive without the founder?
Right.
Uh, can this become institutional? And institutional doesn't mean you have to go to the stock market, It
Yeah.
means you need to have a certain level of governance, yeah, in your
Yeah.
business so that you can convince banks, you can sort of standardize your pricing. Because AI is asking for this, it's asking for professionalization.
Yeah.
And the other question they ask, can this dominate rather than merely survive, because
Right. Right.
when you sell on value, you're dominating and not surviving. And this is really what the market rewards now. And
Right.
if you miss out on this logic, you're really going to find it very difficult to get funded, despite the fact that there's an unprecedented historical wave of money coming to invest into businesses.
Right. Actually, reminds me that actually is usually put as a case story, like something like a remarkable. When Steve Jobs came back to Apple in '97, one of the first things that he did was to discontinue 75% of the production line. Because I think that he understood this concept very, very well compared because he was not competing head to head with features and models and the same thing that many other manufacturers were building at the same time. So he focused on 25% of the things that were valuable for the future of the organization. And now I think actually is the AI is accelerating that process and spread it around everywhere and everybody. So perhaps before we had a visionary that was doing something 30 years ago, but today AI is allowing that actually that spread and a capacity is done for everybody and everyone right now. So interesting what you're mentioning here, because actually it's a completely eye opener. So, oh, actually, we don't need to be a genius now to capture this advantage that we have in front of us and move into the things that actually, so instead of competing in commoditization, to competing in value. That brings me to another point, which is the governance perspective, because AI increases both opportunity and exposure, as we are discussing here, but because when I think in weak systems become visible faster, right? So with AI particularly, so weak controls become weak controls or leadership, or the speed of failure increases, but so does the speed to scale. So you have a positive and negative depending on how you're using these capacities. So probably this is a very unpleasant conversation for many people. So because many businesses believe they are investable ready right now, but investors don't see that. Why is that? So can we go a bit deeper in this?
Yeah, I mean, it's a very important question, this one. And but first, I wanted to go back to what you said before about Steve Jobs and Apple. In
Sure.
fact, Apple features in my book as well.
Yeah.
Is one of the chapter in part three, because we spoke earlier on about static IP and dynamic IP. Now,
Yeah.
this is why Apple became so dominant
Right.
because they conquered very early the concept of dynamic IP.
Right.
They just didn't stop, They start and they never stopped. They thought we got intellectual property, but now we're gonna do iPhone 1, iPhone 2, iPhone 3, and they
Yeah.
haven't stopped after 20 years. So it's thank you for giving me that example because that's the book, that's what I wrote on the book,
Yeah.
and it's an example to follow right now, especially in AI-driven economy.
Yeah.
Uh, so I'll go back to your question about that many businesses believe they're investment ready, but investors hesitate.
Yeah. Yeah.
And you're asking me why.
Yeah.
Um, well, very, very simply, this is because most businesses, they confuse activity with investability. Okay.
Right.
Um, and I could mention the investor, but also the banks as well. So
Yeah.
investors do not fund effort in the same way as bank. They don't really fund your dream. They
Yeah.
fund certainty,
Right.
and certainty comes from architecture, and that's really the invisible valuation gap.
Right.
A founder will say, "We work very hard."
Yeah.
But investors will see fragility, they will see dependency, they will see lack of systems, even worse, a lack of transferability
Right.
because everything is depending on the founder, nothing is documented, lack of governance, lack of predictability. And AI makes this gap worse.
Right.
Because now investors compare you not only to competitors, but they compare you to automated scalability.
Right.
That changes everything completely, including valuation logic. And that's why most businesses will slowly disappear.
Right.
That's unfortunately a reality.
Yeah.
Founder-centric business in particular, not operationally, economically. So this is a big, big threat for founder-centric business where nothing is documented and AI is got absolutely nothing to scale.
Right.
So they become impossible to differentiate. And that's
Right.
gonna be a major, major problem for many founder-centric business, I would say.
Yeah. Yeah, and I think probably we're repeating ourselves here, but the key message is the absence of structure becomes a valuation penalty, if you may, because actually, what as you mentioned, what AI could potentially scale if there is nothing there to found the foundation to scale when there is not there, right? So, but I think here, Matteo, that actually we had to bring this a very important topic, which is exactly why you created a high valuation sprint, because businesses do not need more motivation. What they need is transformation, and transformation, particularly if you don't have a very good plan, a very good outcome, then it's another project. So, and I would love if you can explain what the 12 outcomes of the business or the 12 business outcomes actually represent in these cases.
Yeah, it's all about the evaluation triangle, the application of
Right.
the triangle that was designed in 2017,
Yeah.
but now becomes even more urgent to implement in 2026. And it's translated, the implementation of a business is translated into 12 outcomes.
Right.
Now, those 12 outcomes, they have been designed to take you from a position of where you are invisible to a position in which you are investable, you
Right.
are bankable, you are chased by customer
Right.
because you develop and you build pricing power as well.
Right. Right.
You build what we've spoken before, the right intellectual property, not the
Right.
legal intellectual property, but the commercial intellectual property, where, for example, you follow all the 5 steps that are needed to dominate your market on value, not on
Right.
price. These 12 outcomes are designed to transform businesses into companies that customers, banks, and investors actively chase.
Right. Right.
Because, this is where in AI economies, visibility must be engineered. It
Right.
doesn't happen by accident. The 12 outcomes, they include Number one, becoming bankable. So when you speak to a bank, you are now in a position what to get funded, you know. Number two, creating predictable cash flow. Then three, monetizing intellectual property. Four, you build pricing power. Five, you reduce founder dependency.
Mm.
Six, you engineer AI into the business model. You don't just use tools. You
Right.
engineer, you embed AI into your business
Yeah.
model. Seven, you create operational systems. Eight, you design global relevance. Uh, Nine, you build capital attractiveness. 10, you eliminate invisible risk. Let's not forget about risk. When risk
Yeah.
goes down, valuation goes up.
Right. Right.
It's an equation.
Yeah.
11, you're turning leadership into a scalable architecture because you have to transfer value, of course, you know.
Yeah.
And ultimately, you become a magnet for capital. Um, that's not theory, that's survival architecture for the AI economy. Because AI is not replacing all businesses, but it's replacing really average positioning. And this is where we selected only 15 businesses for each quarter.
Yeah.
So you're welcome to show your interest here. You may be on time for the June cohort, otherwise the next one will be again in September. But if you're interested in joining us, you can write the word sprint in the
Hmm.
comment, and we'll immediately send you a scorecard. The scorecard will tell us, you will receive a free diagnostic from me and from Francisco. It will establish your position across 12 outcomes. So it will
Yeah.
tell you for which outcomes you are already positioned well or you're not positioned so well. So that will tell you what is the next step, and we'll be delighted to help you. You can also send me a direct message to me or to Francisco as well.
Right. Excellent. And I think something you mentioned here that ran my attention um, is replacing average positions. And even if the book was with the research done in 2017, it directly connects with the situation that we are today. And actually, the self-assessment, the 26 self-assessment, I think is very valuable because actually it's a pretty much a playbook on how to start to put together your company to make it very visible to the market, to the investors, and the institution that are lending capital or the valuation itself. Because I sometimes imagine that people think in business evaluation when they are exiting or when they are raising capital, but many businesses are not in that order. But it's like having your property, your house, or your family home. You want to know how much increase the valuation or the appreciation of that asset in the market as you go along. So it's valuable that if you decline in your maintenance and you bring it up to standard, et cetera, obviously the valuation in the market is going to decrease. But actually, if you bring it up to standard or even above standards, particularly in this AI economy, that evaluation will start to increase and you really have an asset that you're working for and is, well, all the things that we are mentioning here. So why actually, I think I have to ask you this question: why the title itself feels increasingly relevant now, Matteo, when you designed it like a few years ago?
Yeah, the title is so relevant because this is how historically, and the book will give you so many case studies.
Yeah.
Businesses have scaled only after they pivot, and they only
Right.
pivot after they fell. I mean, we were talking about Steve Jobs before Apple.
Yeah.
That's what happened with Apple. They fell, they pivot, and then they scale.
Right.
And the story of Apple is very inspiring for many because after they decided to scale, they scale it in a way where they anticipated the world by 20 years. Because effectively, what they're doing with their intellectual property, continuous development, they're doing what we
Right.
call recursive self-improvement. It just doesn't stop, you know. It started, but it doesn't stop. is total domination. Most businesses today are already in the fail stage structurally, but that's good news because that's where you start from, you know?
Right.
They just don't realize it yet. Fail does not mean collapse. It means the current model no longer compounds competitively.
Right.
Um, Pivot means redesigning the architecture. Okay. So if you want to really be inspired by Apple, we can mention Apple, but we can also mention other businesses
Yeah.
like Tesla, for example. Yeah. Not tweaking tactics. Okay. Not posting more content. Um, I would say even not buying another AI tool. That's not what's going to really give you the result. But real structural redesign and scale only happens when the business become institutional investable.
Right.
So that's the sequence. Fail, pivot, scale. As I said, it's not a
Right.
slogan.
Yeah.
It's a cycle. And don't stop at fail. You're actually if you failed, good. You're halfway there.
Right.
The dangerous thing is scaling weakness. You don't want to
Right.
scale weakness. You want to pivot first. Yeah. You
Yeah.
fail, then you pivot, and then you scale. AI magnifies both intelligence
Yeah.
and fragility. So
Right.
don't start scaling from fragility. Start scaling
Right.
from a strong position.
Right, excellent. So I think actually we can close today with a question. So just to think about all the things that we mentioned today. So if you are listening, all what we mentioned today, I'm not going to recap it because it's very a lot of golden nuggets here. But if your business disappeared tomorrow, so what would the market replace you easily, or would your absence will make a genuine matter in the market, right? So what I'm trying to say is actually, could you be easily replaced as a commodity, or your absence will be noticeable? So what is going to happen with your business tomorrow? So that's probably a real valuation question in this AI economy. So just to wonder how you're building for these changes that are happening as we speak, literally. So I think that we can bridge to next week, what we're going to talk about: why banks, investors, and capital providers says no, even when the business appears to be very profitable, right?
Yeah, this is where next week we're going to talk about when why banks say no to you.
Yeah,
I recently wrote an article about the illiteracy
yeah,
with banks. You know, no one seems to know how banks operate, how banks make money.
yeah,
So yeah, we need to talk about that as well. Um, I would say if today's conversation resonates, that's exactly why we created the high valuation sprint.
right,
So 12 outcomes, 49 days. In this 49 days, you will receive 12 specially tailor-made toolkit and really workbook for you. They are tailored to the stage in which you are, okay, and to the size of the company in which you are. So let's say if you are a startup, you receive what is relevant for a startup.
right,
If you are a scale up, you receive the for the outcome what matters for your scale up. If you're in exit,
right,
you will receive the the work will related to the exit phase, how to become bankable in exit, how to increase your pricing power when you're in exit. So it's tailored. So this is not really like a standard approach, like you know everyone gets the same. You're gonna get what is relevant to your business stage, which is why when you fill up the scorecard, you will find what is relevant to your stage, to your position.
right, right,
So this high valuation sprint is a complete transition from a position of being operational survival through strategic visibility. Because the future really does not belong to business that work harder. That doesn't happen, unfortunately. It's not about working hard. It belongs to businesses that become impossible to ignore.
Right.
So if you want details, comment Sprint, and we will send the information personally. You will have a scorecard, and we'll send you the diagnostic all for free.
Okay, fantastic. Thank you very much, Matteo. And we reconvene next week again, and have a great week.
Thank you. Bye.
Thank you. Bye-bye.